This conference is now being recorded.
Good afternoon. Welcome to the New York State ASBO webinar, Introductory Accounting Concepts. My name is Matthew Darius. I am ASBO's Senior Staff Associate for Professional Development, and I'll be moderating today's call. If you have questions at any time, please feel free to ask them in the chat window to the right of your main screen, or you can speak to our presenter over the phone by hitting 7#. That'll notify me of a question, and then we can go from there. Our speaker for today is Joe Eberly. He's the Business Administrator from South Jefferson Central School District, and he's very excited to be here to help you guys out. So please give Joe a big welcome. Joe, go ahead.
Well, good afternoon, and thank you, Matt. And it looks like we have a small crowd here, Dawn and Marcia. Welcome to this introductory accounting course. It looks like we have another entrance. Good afternoon, Steve. Again, this is Joe Eberly. I'm the Business Administrator at South Jefferson Central School. Just sort of a brief introduction. This is my starting my 29th year or so doing this job, and it has all been with the same school district. So I've seen a lot of certainly activities that are normal to a school district, and over my career I've seen some pretty abnormal things too. So we have an awful lot of experience to go through here, and I'll be trying to do that as we talk about these introductory concepts, because honestly the basic accounting structure that ASBO puts out there is an excellent three-course program. I've had experience in all three of them, and it provides a very well-rounded, not only training in the mechanical things, regarding school accounting, but it also provides some a basis for sort of the building block of a school administration. So we're going to take this. We're going to take this in a couple different ways. We're going to give you just a general sort of overview of some of the accounting, sort of basic things, and also and we'll get into some mechanical things. Not very many, but a few. Some of the mechanical type transactions that you'll encounter, but also I like to bring in the where does this fit in the the overall picture of school finances, and so you'll get some maybe some tidbits from me as to how this sort of thing fits into the administration of school districts, and so you'll hear me say things like that as we go through. So again, this course is basic. It's just the very introductory level of things. It's sponsored by the New York State Association of School Business Officials, and my email and phone number are in the back of our presentation here. And so before we leave, you'll have that information in the event you have specific questions moving forward. And if you have things, Matt told us how to interrupt things and get those questions offline, and we can answer them. So first of all, there is a huge need in reporting of the finances of a school district. We are concerned with the collection of and analysis of school finances. Now, right off the bat, I can tell you that my job as district administrator, as business administrator, it very much depends on the accurate accumulation of data, of financial transactions. It is absolutely essential for my job to work with accurate, timely information. We get that timely information from the accounting system. Now, many of you, I'm sure, have automated systems that help you provide accurate, timely information. Now, it comes to us in many different forms, and we're going to look at some of those forms here today. But I can assure you that information that I need to do my job, that is, supervision and management of the budget process and the budget itself, estimate fund balances, manage capital and other fiscal accounts, is absolutely essential. It depends upon accurate and timely information. Without it, we're blowing smoke. And these days, it's even more critical because as resources sort of dwindle, or accurate and time. If it is not communicated, the second bullet there, the information has very little value if it can't be communicated in a timely and effective manner. And we work very diligently to make sure that when we put data out there, that it's understandable. You can talk about all the kind of books you want. If nobody understands it, what good have you done? So it's not only important that it be accurate, but it be communicated in an effective and timely manner. Now, who uses this stuff? Well, look, I just shared with you the importance of district management. That's the superintendent, the business administrator, the treasurer, but the school board, obviously, they're the boss. They ought to see what's going on in the school districts that they supervise. They would be a key part of that. Investors, I can tell you that even this past 2 weeks, I've spent time on the phone with investors that are looking at our school district to buy some of our bonds, and the information that I've provided to them from our audit report and our fiscal, all of our fiscal reporting, very critical and important when an investor decides it's going to consider South Jefferson Central School bonds. Obviously, creditors look at this information. Taxpayers, I can tell you that's one person that's not on this list are banks. Obviously, the banks look very carefully and closely at this. The state education department, and of course, they have a whole department that looks at school finances. And now the state comptroller is very intimately involved in schools these days. As you know, and maybe you have already been through one of their fiscal audits. Every school district in the state now has been audited by the comptroller's office, and first time that's happened in over 30 years, or almost 30 years. And all school districts have now been audited, and now we're on round 2, where the Office of the State Comptroller is very much involved with our school finances, whether it be, reporting our of our ST3, or whether it's the calculation of our tax cap now, or anything in between. And we're seeing them very involved in our school district accounting. So it fulfills a huge need. Now, internally, I'm not only the business administrator, but I'm also the district treasurer. And as such, I use the information we get internally to make sure that we comply with legal and contractual provisions. Okay, what does that mean? Well, I can tell you that we have a very active special aid fund, and we're going to get into that in just a moment. But in order to comply with grants and provisions that are outlined in those grants, it is absolutely critical that my my internal reporting mechanisms are timely, accurate, and dependable, because that's what provides us with the necessary information to manage those special grants, special projects in a timely fashion. So we're going to talk a little bit more about those in just a minute. I love the middle bullet here. We provide management with information on current performance that it needs to make future financial plans, and that's a fancy way of saying we're helping district management provide projections for the fund balance, or for what happens at the end, the bottom line, if you will. Our school district begins the process of calculating its fund balance estimates as early as this year. We did it in mid-October. That was the earliest we've ever done it, and I've done it. I think I've done it 13 times since mid-October, and that averages about every other week. And these days, we're doing it almost on a weekly basis. Why are we doing that? Well, we're doing that to make sure that as we build next year's budget and the budgets after that, that we're using accurate information as far as projections are concerned with regards to our fund balance, with regards to expenses, with regards to revenues. They're all key pieces of information that help us manage the district. So again, we're providing top-level management with information on how we're doing right now so that we can make future plans. Now, how do we do that? We have a few examples here on our slide number 3. Of course, the budget status report is, as you would think, I'm not sure that needs much discussion, but a budget should, obviously, you should be able to look at that budget status report and say immediately where your struggles are in terms of your accounts with the necessary appropriations, or accounts that are spending more than they should, or encumbrances that are outstanding. All this information ought to be able to be easily recovered and retrieved, and it should be accurate and it should be timely. So one of the tools we use is a budget status report. There isn't a day that goes by that I don't take a look at a budget status report from any one of the many funds that we'll deal with. And we'll talk about fund accounting in just a moment. The budget is obviously the appropriation side. The revenues are that's where we get our funds from. And so we use the budget status report to watch our budget. We use the revenue status report to keep our eye on the revenue stream that's coming in, how it compares with what's budgeted, and those variances, plus or minus. The Treasury report is a report that shows a reconciliation of sorts to the balance, the bank's cash accounts. We have, I don't know, there's probably maybe 30 different checking savings accounts, CDs, that all require a treasurer's report at the end of the month. That treasurer's report shows the Board of Education beginning balance of the accounts. These are the bank accounts. It shows the changes through the month with regards to disbursements, with regards to cash receipts, and the balance at the end of the month as reconciled by the bank. If you got one thing out of this webinar so far, and that would be this: you should be balancing your checking and savings and CD accounts every week. And now, we do it here about every third day. In the old days, and I can say that because I've been around a long time, we used to do that on a monthly basis. But one of the best ways to prevent fraud is to reconcile those accounts on a periodic basis. 3 to 4 days, you ought to be reconciling those accounts. Now, that may be a tall order. That may be a very difficult task at first, but I can tell you it reaps tremendous amount of rewards when we're balancing those accounts often. When in doubt, balance. And if you see anything out of line whatsoever, stop the processes immediately, because here's where fraud is detected. And one of the things that the Treasurer's report provides, it provides a reporting model to the Board of Education that your books are in balance with the bank, and that's important on a monthly basis, absolutely. But it's more important, even so, to balance those accounts on a periodic basis, every 3-4 days, maybe 4 or 5 days, because that's where we detect fraud. So I just throw that in there as a real something that we picked up over time, especially during vacation periods. There was a school district here in the central, central eastern part of New York State. Somebody hit their bank accounts 3 or 4 days before vacation, and then in vacation when no one else was around, nobody saw those transactions, and they walked away with several $100,000 before the school district knew what hit them, and it was during vacation periods. So guess what? Villains don't take vacations. In fact, they make their effort to hit you when you least expect them. So again, that's a little bit of an aside there regarding Treasurer's reports, but I for the good of the order, we need to stress that those reconciliations, and the Treasurer's report is just a picture of that. Okay, let's go on to the next thing. Now, first of all, the ST3, if you're not familiar with that, that's our annual financial report. That is a single document. It is the result of all of the year's transactions. It starts July 1st, goes through June 30th of every year, and its report. Generally, school districts provide this ST3 at the end of July. Again, when all their books are pretty well closed up. It's an annual report. It is formatted for us by the State Education Department. It's about an inch thick. It provides an awful lot of information with regards to the finances of the district, in terms of its budget, in terms of its expenses, no matter where those expenses have come from, and their income and balance sheets, if you will, for all the funds for the entire district. The State Education Department wants to see that by, I believe, September 1st. The Office of the State Comptroller, they want to see that ST3. We use that document as a basis for our state aid forms, and maybe you've participated in the collection of state aid forms. That usually happens in July and August and September of the school year. It is also used by our auditors that come in. Of course, you know that we have an audit that is required every year, an independent audit. It's called the external audit, and it is used to build the financial statements for the school district. Now, just an aside, maybe some of you are from very large school districts that provide their own financial statements, and that's fine. Most school districts, especially here up in the North Country, our school district is a small rural school district right off of Lake Ontario, and but most districts up here, their auditors, their CPA firm that they hired to do the external audit, provides the financial statements. They'll build those financial statements, and much of the information that they use to build those financial statements comes from the ST3, which is obviously assembled and completed by the school district. So every year, the external audit is, as you see, it's required by Ed law. and we use the ST3 to build that. Those financial statements that are part of the annual audit are to be filed with the State Education Department by October 15th, and the Office of the State Comptroller. Now, that prepositional phrase, with corrective action plans, comes here in the recent 8 or 9 years or so, when the auditor, the external auditor, develops his management letter, and he provides suggestions or directions or improvements of the fiscal controls of the school district. The state's very intimately involved in that process. They want to make sure that there's a corrective action plan that the school district has accepted by the board, has published about it in the local newspaper, and that the school district understands what the audit suggests and what steps that it takes to overcome any deficiencies that the audit might find. And it has a period of time, 90 days, I believe, before for completion of those corrective action plans. Those plans, by the way, have to be submitted to the State Education Department and the Office of the State Comptroller. In districts, if you're in a large school district where you have some federal funds that are recorded in the Special Aid Fund, by the way, that exceed $500,000 a year, you're required to do a single audit by the federal government. And there's a whole series of filing documents that you must provide. Usually, the external auditor, as part of the external audit, provides that filing for you directly to the feds. And that's done October, November timeframe. Okay. First of all, our financial reporting must be able to present fairly the financial position and results of financial operations of the funds and accounting groups of the district in conformity with generally accepted accounting principles. That's GAAP, generally accepted accounting principles. Your financial systems ought to be able to present to management, to those stakeholders we talked about, to the auditors. It should be able to present fairly the position of the district in terms of its finances. Most accounting systems today provide a very good mechanism for this. While in the old days some people were on manual systems, today most are not. Most are obviously computerized and provide a good place to begin the reporting process. The second thing here is our systems must be capable of determining compliance with financially related legal and contractual provisions. And we're going to talk a little bit about the different funds that are involved. But also, we're going to talk a little bit about some of the legally required budgeting processes that we go through. How can we spend money? Can we overexpend a budget item? Can we buy equipment when it's not budgeted? Our system should be able to determine or provide stops for in the event those things might happen to occur. So we should understand that these two things are sort of general, but accounting systems certainly help meet both of those. Now, I want to talk about funds, F-U-N-D-S. If you've been around school districts at all, you know there are several different funds that make up the basis for school accounting. Now, a fund is defined as a fiscal and accounting entity with a self-balancing set of accounts, recording cash and other resources, assets, together with all liabilities, and what's left is called the fund balance. The activity of each fund, including revenues and expenses, account for specific district activities or attaining certain objectives in accordance with regulations, restrictions, and limitations. Each fund, assets always equal liability and fund balance. In the real world, we'd call that a balance sheet, but in the fund world, we call that assets equal liabilities and fund balance. Now, I want to talk about these funds for a moment. There are several different funds in school districts, and when we operate a business office, we have a basic set of rules and regulations on how to purchase things and how to pay employees, how to do those things. We understand that. But equally important is the understanding of this fund concept. It's a sort of a group of like activities. Let me give you, for example, everybody knows that, there's a food service program at your school. So we report those assets, those revenues as they come in, expenses as they go out. We report them in the cafeteria or food service set of accounts. That is the food service fund or the cafeteria fund. It's where we lump together all of the financial activities of the cafeteria fund. The capital fund, and we're going to talk a little bit later about the capital fund, is a place where we report and record all the revenues and expenses and assets and liabilities and subsequent fund balance of those accounts for our capital projects. They have a unique set of rules and regs that we follow. The special aid fund is a very active fund where we report and we record the revenues and expenses of our federal grants that we might get in. And there are specific rules and regs about those grants, and they're to be followed and tracked and managed using the special aid fund. And of course, the one we haven't talked about is the general fund, and that's probably where most of our transactions occur. It's the fund that we get voter approval for, again, it is a separate and distinct set of accounts for the general operations of our school. Each of those funds has assets. Each of those funds has liabilities and residual fund balances, hopefully. They are designed for a specific set of purposes, and let's see if we can talk about some of those right now. There are two types of funds, governmental and fiduciary. Let's talk about the governmental funds. You can see, first of all, the general fund is by far and away the largest. We have the school food service fund, the capital fund, the debt service fund, and permanent funds. I want to talk about just a moment. What you don't see on here, I'm kind of surprised at, is the special aid fund, where we were just talking about that. That's where our grants get plugged in there. Our Title I funds, IDEA, Section 611 and Section 619 funds are reported in there. Our ERA funds, that if your experience in the business office has been in the past few years, you know that we've had an awful lot of activity from the federal stimulus packages. Those expenses, most of them, were reported and recorded in the special aid fund. And in here we have, of course, the general fund. The key there is that requires voter approval or the adoption of a contingency budget. And you know, that's where all of the public is involved in these days, is in the general fund and the establishment of the tax levy and the passing of the school budget. And all that stuff happens in the general fund. Food service fund, we talked about that. Guess what? That's where our cafeteria people get paid out of, and the receipts that they take over the counter end up in the food service fund, and the expenses to fund the meals, that happens there as well. The capital fund, interesting distinction here about the capital fund, its life starts with when voters approve a capital project or gets emergency approval by the Board of Ed, and it expires when the task is complete. Not necessarily June 30th of the fiscal year. The general fund has a life expectancy of 1 year, July 1st to June 30th. Same with the food service fund. But the capital fund starts when voters approve a project and continues until the project is completed, sometimes 3, 4, 5, maybe even longer, depending if there are lawsuits, and it's still active and open for several years, which gives you a set of challenges when you're trying to manage that capital fund, because it doesn't have June 30th as its drop dead date. Debt service fund, a fund we use to report and record, obviously, our mortgage payments. Not all school districts are required, by the way. They have a debt service fund, but our district has one and uses it to manage its obligations, long-term obligations. Again, that debt service fund starts and stops July 1st and June 30th, respectively. Permanent funds, they're used very rarely in schools. If somebody might provide a large sum of money that would be required to stay in the school district forever and ever, and maybe you only use the interest to fund maybe a certain event or scholarships. But by and large, permanent funds are generally not as used in typical school districts. Now, there are fiduciary funds as a type of account that we manage. Fiduciary funds typically are really the trust and agency fund, private purpose trust funds. Now, school districts can act as a trustee for monies given them. For example, let's pretend that you had somebody that came to you with a large sum of money and said, I would like you to dole this money out to the graduate with the highest GPA with green eyes. You would set up a set of accounts in the trust and agency group of funds, or the private purpose trust funds, to act as a supervisor or a trustee of those funds. We call them fiduciary funds, and again, they are put there specifically in trust that we're going to do the right thing with them. You might find after payroll, as you run payroll, you might use your trust and agency fund as a place to store the temporary withholdings from your employees to be paid to the federal government, FICA and state and federal taxes payable. They might end up in the trust and agency fund, albeit for just a few moments, but we use the agency funds in which to do that. I love this, the bullet on the first slide. In a perfect world, we all know that there's no such place. But if there were, we would have budgets with revenues that would always equal expenditures, and fund balances would always be zero. Revenues would equal expenses. In these days, we would look forward to having our expenses match our revenues, but oddly enough, these days, it's the other way around. Expenses are outlasting revenues, so we're in a little bit of a turmoil here in schools, but if everything else were equal, revenues equal expenses, everybody's happy, life goes on. When revenues exceed expenses, our fund balance grows, and we've had a time, honestly, in schools over the past several years have exceeded expenses, and fund balances have been growing. To some people that's a very good thing, but to others that might not be so good, especially to schools that are hoarding money. They've been hoarding money because they've been raising revenues that exceed expenses every year, and so these fund balances have a tendency to grow. And some people don't like that so much, especially when it's in excess. When expenditures exceed revenues, the fund balance will decrease. That's where we are. Most of those schools these days, at least up where we are, we're experiencing expenses that exceeds revenues, and so our fund balance, the fund balances are decreasing. By the way, that's called structural deficit, when your expenses are more than your revenues. Just like at home, if you spend more than you make, you either have to borrow the difference or tap into your savings accounts to balance the books. Well, schools are the same way. I mean, if you spend more than you get, your fund balance is going to decrease. You got to come up with that cash someplace, and it's in its simplest form. It's very similar to the way you operate your home. If you spend more than you make, somebody's got to make up that difference. You either borrow it or you take it out of your savings account. Obviously, we would like the second bullet, revenues exceeding expenditures and having our fund balances grow. But, those are, we live in very difficult times these days. So it's very challenging, Obviously, if you have a negative fund balance, you're probably going to get some attention in Albany. The Comptroller's Office, the State Education Department Office, with one exception, they don't like to see negative fund balances. Negative fund balances means you're in real trouble. Except there's one exception in the capital fund, because of the way we recognize revenues when they come in. That is the permanent financing of serial bonds. We will show a negative fund balance during the construction periods. But other than that, our fund balances should be positive. They should not be negative. If they're negative, we're in the soup. Now, there may be, from time to time, in the school lunch department, for example, you might find yourself with a negative fund balance. That situation, again, gets a red flag in Albany. You're going to get a letter. You're going to get some attention. And the state wants to know, how are you going to overcome this negative fund balance? Because over time, if you continue to have a negative fund balance, somebody's got to come up with that cash someplace. And generally, they don't like to see those negative fund balances. Okay, we talked a little bit earlier about some of the mechanical things. We operate on what is called a modified accrual basis of accounting, and we're not going to get into what that means fully at this moment. You would get more information about that in Accounting 1 and Accounting 2 classes, and I recommend if you're going to hang around the business office at all for any length of time, Accounting 1, 2, absolutely essential, especially if you're in a leadership role. Okay, revenues should be recognized and recorded in the period in which they become available and measurable. They give us a little bit of a simple example. The district last night received $550 in admissions to the basketball game. We have a debit to cash and a credit to revenues. And every time you see that third sort of entry there, it's a posting to the subsidiary account of admissions, because revenues is just too broad of a term. We need something to differentiate those revenues in what we call a subsidiary ledger, and that is further defining what that general revenue is of $550, and that is admissions here in this particular case, $550, and they call A980 revenues. That's the control account for revenues, and they use 1410 as the admission as one of the subsidiary accounts underneath the control account of revenues. It just gives us a little bit of idea, a little bit better picture about where those revenues are coming from. Expenses, again, recognized and recorded in the accounting period in which the fund liability is incurred if it's measurable. Now, pretty simple things here. You know, your maintenance guy, he goes out and he buys $800 worth of expenses, worth of custodial supplies, let's say. And when we pay that invoice to the vendor, we credit cash. We debit an expense account. Again, the control account there is 522. Those are expenses or expenditures, I suppose. And the subsidiary account there is 211045. By the way, that happens to be a instructional supply account, not a custodial account. So every one of those functions tell us exactly what function of expense just by looking at it. 2110 is instructional. 45.45 there are supplies. So we know it's an instructional supply. And so that's what the entry looks like. Credit to cash, debit to the expense, and of course at the end of when you close out the books, you close out all of your subsidiary accounts to the control account. The subsidiary account always totals the control account. Now, just want to reiterate here for a second that the same entries, you'll see the prefix A in our example, that's typically the general fund. C is the food service fund. F is the special aid fund. We use new numbers around here, 1, 2, 3, 4, 5, 6, 7, as the differentiation between funds. The books, when you see them in different manuals from the state, you'll see those as A, B, C, D, E, so on and so forth. It's just internally here, we use the numeric number. It's a little quicker on the keypad than an A. So that, again, basic, these expenses would be the same sort of thing, whether it's the general fund, special aid fund, food service fund, capital fund, trust and agency, or the different funds we talked about, debt service. But essentially the basic principles are the same. Okay. Budget should be adopted for all governmental funds. That means, now the general fund, obviously, that's easy. You know, your voters have something to say about that. You know, your Board of Ed approves the budget subject to voter approval in most school districts other than the big, I think the big cities. Once your budget is adopted, your tax levy is set, and you're on your way. But budget should also be adopted for the other funds. In that special aid fund we talked about earlier, let's say Title I funds. You have a budget. Somebody in your district provides and files for the Title I grant or IDEA, that is 611, 619. Those budgets, there are some ways in the district. You got to get those to build your appropriations and your estimated revenues to make sure that those have budgets. It sounds almost like a basic sort of premise, but you'd be surprised at the districts that you know are numb to the recording and reporting of budgets in all their funds. Food service the same way. You should understand that you should have a budget on the books somewhere along the line to manage and control, so you know where you are. How are you going to know if you don't start off with a budget? Your budget should be pretty simple: estimated revenues and expenses. They should be balanced, either this revenues and expenses being equal, like in the case of the special aid fund, excuse me, or estimated revenues plus appropriated fund balances and reserves should equal estimated expenditures. In the general fund, we have estimated revenues. We appropriate some of our money left over from the previous year. We may have even appropriate some of our reserves, and that equals our expenditures. Again, estimated expenditures are called appropriations when the budget's approved, and the appropriations become the authorizations to expend those funds. And the last point here is true with the exception of the capital fund. Appropriations expire at the end of the fiscal year. I love those slides because they tell you how it works, but in the real world, if you have principals, for example, building principals that say, wait a minute, that appropriation is approved by the voters, you have to spend that money. Well, we all know what happens there. We only spend the money when we really think we can afford to spend the money, because harder times are coming. So while it may be legal, management might have something to do with the approval of specific ordering, especially in a very difficult year. Again, we keep a close eye on revenues and manage them against that budget. If we think our revenue stream is going to generate $27 million, by golly, we're taking a look at that periodically, and in our particular case, about every 2 weeks. We're looking to make sure that our estimates are accurate. We're looking to make sure that the actual revenues are in the house. We're looking at the variance between those subsidiary accounts we talked about earlier to make sure that our revenue stream is coming in on target. Projecting revenues and how they relate to our budget is part one of the calculation of our fund balance. Now, look, you do this in every fund, so you know by fund how you're doing in the year. When you're talking about the special aid fund, you'll hear me talk about the special aid fund a lot because there's a lot of activity that goes there, and it creates a lot of concern if things aren't working right. We're looking at revenues in the special aid fund, obviously by grant. So while a budget is approved and federal grants approved by out of Albany, whether it be Title I, Section 611, Section 619, those funds have approved budgets. A continual tracking of our revenues there helps us determine if the budget has been approved, if the state's sending you money in a timely fashion, if we're not getting the money, why aren't we getting the money? We should be tracking those revenues. And it's no small item here because we assume that the educational side of the office has done all their work. And sometimes they do a great job, but sometimes they forget things. And a project could be motoring along and might not get approval, and you might not know about it. So it's always good to do a periodic check on all of your grants in the federal fund to make sure that the budget's been approved, that that money has started to be being flowed from its source, whether it be a federal program or a state program, to come in, making sure that the projections that you've placed on the revenue side are accurate, and we're going to get those funds as promised. And if they're not coming in, you got to ask them the next question, why, and then dig it out. Let me give you an example. We run IDEA funds under Section 611 and 619. And the other day, I was reviewing our special aid fund and found we never got a revenue from Section 611. And now, I know there's a budget because I installed that budget in our computer system, but for some reason, we weren't getting any cash out of Albany. So a few phone calls later, and I found out, well, everything was fine. Our instructional program here submitted the budget on time with all the supporting documents. It was all okay. It's just that it sat on somebody's desk in Albany for quite a while before it was approved. If you don't double check on those things, you could be finding a very difficult time, say May or June, when you're trying to do things at the last minute without time to get things corrected. Now, why is that important? Well, because if you don't get those funds and in from Albany, and you've been spending those funds all along out of the special aid fund, guess what happens if those grants, if for some reason they get disapproved and you've already spent the money? Well, those funds have to be replaced somewhere along the line. So it may be a hit on the general fund if you miss or forget or for some reason a grant wasn't approved. It can be a real nightmare because you might have people that you've been paying all along without any justification to do so and without any cash to do so. Again, you've heard me focus a lot on the special aid fund because it can really come back to hurt you if you're not managing those funds carefully. And one of the ways to do that is to make sure that your budget and the estimated revenues that you built into that special aid fund are actually coming in. And it takes quite a while. There's a lot of funds over there. We track actual expenses and something called encumbrances against estimated appropriations. Now, using the same example there as the special aid fund, we just spent probably 2 days reviewing every special aid fund expenditure to make sure that the people lined up in those budget codes are properly lined up in the right project. And we do that by looking at actual expenditures and forecasting, taking those actual expenditures, forecasting those for the rest of the year to make sure we fall within budget. We do the same thing with encumbrances, making sure that we haven't overcommitted our projects. Now, obviously, watching, tracking expenditures and encumbrances against budgets occur in every fund. And they're critical in every fund, whether it be food service, general fund, special aid fund, capital fund, very essential. We do these things with a budget status report, which we talked about. It has to be presented to the board on a monthly basis for all funds. And that's a requirement, and your Board of Ed should see those documents, and if they have any questions at all, search them out before the next meeting. Education Law 2117 talks about those things, and 2122. So pretty important stuff. Revenues. This is the revenue report itself. We on that revenue, and we've talked about some of these things already. The revenues that we start with, the original estimated revenues. If we've made any adjustments to those, and we show the net of those adjustments and the amounts received to date, and then we have revenues that we expect to receive for the rest of the fiscal year. Now, we don't have a lot of adjustments to estimated revenues, but there are some. If, for example, somebody comes to you and says, I want to help build that playground out there, and here's $10,000 to buy that equipment for the playground. You can adjust the budget for that. Obviously, increase $10,000 in gifts, and then it gives you the authority then to spend the money. So we see revenues and their estimates. Always we're looking to make sure that we have a good handle on the revenues as they're coming in and how much is left to come in. I spent a lot of time, by the way, reviewing these estimated revenues and estimated expenditures as part of my calculation of my estimated fund balance. An awful lot of time. We're watching that like a hawk, and we just take very serious those estimates. The budget status report is just one of those documents we use. And then on the revenue side, of course, the same is true on the appropriation side. This is the budget. And again, if by now you've seen what these budget reports look like, there is a process for transfers. I think we're going to talk about that here in a minute. But again, we're looking at what not only have we spent, but what have we committed, and what's uncommitted or left unencumbered, if you will. Let me catch my breath here for a moment. We use something called an encumbrance. Now, when a purchase order is cut or processed, most of your accounting systems automatically encumber the money when the purchase order is cut. In this particular case, if you had those instructional supplies earlier, some sort of request for a PO was submitted to the business office, and it was approved. A purchase order was cut, and as soon as the purchase order gets cut, the encumbrance is posted to that account. So when you look at your budget status report, it will show that even though you might have only spent $800 and you have encumbrances out there for another $500, even though you haven't spent that $500, you've committed it. And the budget status report, in conjunction with encumbrances, provides another tool to manage your balances that you're watching. Some people mass encumber for salaries, for fringe benefits, for their Niagara Mohawk bills, for their utility bills, and so on and so forth. Again, it's just a little help to make sure that you can estimate your revenues and expenses moving forward. We just use the word encumbrance. It's to prevent the same budgetary dollar from being expended twice. If you cut a PO for it, your accounting system, when it pays that invoice, liquidates the encumbrance. It should be doing that. We don't have to say it these days, because most systems that use the purchase order for encumbering money also liquidate that encumbrance when the invoice is paid, so that our budget status report is an accurate picture about remaining funds in those accounts. Okay, so I think we have an example. We do have an example here about an encumbrance. A purchase order is issued for $450 for office supplies. You can see that subsidiary account A, that's in the general fund, 1310. That's in finance department. Business office here, supplies, started with a budget of $600. We cut a PO to Staples for office supplies for $450. We sent that PO. Notice that balance shows I have $150 left in that account, even though I haven't spent it yet, but I've committed it, so I record it as an encumbrance. When I pay it, and I paid $450 in this particular case for that encumbrance, now it liquidates that encumbrance, shows up in expenditure. Now I got $175 left in that balance. Notice, because it either was an encumbered or an expenditures, not both. If it ends up in both of those, you end up with a minus balance. So again, most systems liquidate the encumbrance when you pay the invoice. But again, your accounting system should take care of that pretty well. Now, here's a few other thoughts about encumbrances. You can tell right away if an encumbrance, if an account code does not have a sufficient appropriation PO, most systems will stop, send a flag out to the operator that says, wait a minute, you put in a purchase order for $200 for office supplies, and you only got $175 left in that account. Typically there will be a flag out there that says you can't process this PO. There's not enough money for it. And most systems have internal flags that say don't cut the PO until management is called in to determine what to do about that. Sometimes management says, okay, I'll deal with a negative balance, and they'll allow it to be approved, even though there is a negative. But the writer of this PowerPoint, by the way, doesn't like that idea too much because he says under no circumstances should an appropriation be placed in a negative balance. And although that's good practice, I can tell you that sometimes it does happen. But the question is, what happens next? Is there a general fund transfer pending, or is management alerted and aware that there's a negative balance out there? Auditors hate negative balances, I can tell you that. And when the internal auditor comes in, not the external now, the internal auditor, he'll take a look at those budget status reports to make sure that in all cases that there are no negative balances. When there is, that draws a red flag, and that's a problem that has to be addressed by management and right away. Now they can approve transfers between contingent codes or from non-contingent codes to contingent codes. The Board of Ed has a transfer policy. Typically, I've seen this differently in different schools. Sometimes the Board of Ed gives that authority to the superintendent. Sometimes the board itself wants to have the final say on transfer among accounts. I know in our particular school district, if there's a transfer it's in excess of $25,000, it needs Board of Ed approval. Superintendent can approve transfers for up to $25,000 without Board of Ed approval. Okay, let's move along here. Limitations, you can't just go out and increase your budget. That's a no-no. However, you can increase your budget if you get certain grants and aid from state and federal government. You can increase your budget to the amount of the gift, for example. That example we used earlier. I know our local legislator just recently notified us that we're going to get $30,000 from the state for our use. It didn't tell us how. Just said you're going to get $30,000 here, whatever, use it. And so we can increase our budget by that amount because it's considered a grant in aid. We treat gifts the same way, and we used that example earlier. If you had an insurance proceeds from a loss, you could increase your budget for that. So there are ways to increase the budget after the board and the voters approve. Now, we talked about transactions in the general fund, in the food service fund, in the capital fund. There are also transactions that happen in other funds. We call them supplemental schedules. They use, as an example here, they use a capital asset. In the real world, they don't have this problem. When somebody buys a piece of equipment, the debit is to fixed assets and the credit is to cash. In school districts, however, it works a little differently. We record the expense, maybe in the general fund. In this particular case, we purchased a school bus. But we have a second set of books to report those fixed assets in a separate ledger to keep track of them more clearly, more adequately, maybe more accurately, especially over time. So this little slide tells us that we have need for a supplemental schedule for capital assets. We report those capital assets in Group K, or a non-current governmental asset group, and it's part of the ST3, but it's on supplemental schedule number 4. These assets are depreciated, and only depreciation is recorded, and the depreciation, is recorded not only for expenditure purpose, but for valuation purposes as well. So, again, we keep a second sort of supplemental set of schedules for certain accounts, in this particular case, capital assets. Because our investors, bankers, taxpayers want to know what the capital assets are worth. Are they being properly insured? Are they being properly depreciated? Are they being properly recorded? Are they being supervised and watched? Is there a proper numbering system? Are there transfers that are, is there a method for transferring those in and out? So again, we use a supplemental schedule to help do that. We use some sort of fixed asset accounting system to manage the internal sort of transactions with regards to capital assets. We also do something with supplemental schedules for the capital fund, not the capital fund specifically, but the long-term debt group and the liabilities of a district. The long-term debt group is a supplemental schedule. It shows, as you would suspect, one particular schedule for your outstanding serial bonds. If you have short-term bonds, there's a place on a supplemental schedule to outline those bonds so investors and taxpayers know that they can look at the supplemental schedule of a long-term debt group to determine what the long-term, obviously, obligations of the district are, because they might not appear in the general fund. So if they're not in the general fund or capital fund, they're probably in the long-term debt group of accounts. And so they give a little example here about that entry. So we have liabilities, long-term liabilities. That's that second bullet. Again, stressing there is another supplemental schedule someplace out there. It's recorded in the ST3 and referenced in our annual audit. All right, let's see what else we got here. Let's see. Staying on top. Typically, the supervision of the supervision and management of the district. Probably you could meet with them and they could tell you what things do you do to make sure that things are working well in your school district. Again, I do it about every other week. I'm looking at our monthly trial balances. Are the accounts in balance? Do the assets equal liabilities and fund equity? I have a special report shows me every group of accounts, all their assets, all their liabilities, and I can, in a moment's notice, look through all those accounts for key items and tell us where we are. Does it seem reasonable? Are they supported by other data? Am I looking at those monthly budget reports? Am I preparing fund balance and cash flow projections? Up until this point, we haven't talked about cash flow, but I can tell you that that's a critical piece of the staying on top of your district finances. Managing cash flow is essential to do that. We did talk earlier about the treasurer's reports and balancing your checking and savings accounts. Again, cash flow is a sister to that. If you're not watching cash, I can guarantee somebody's going to take it from you. And you better be watching it because you're going to have to cover payroll in 2 weeks. when state aid is going to be a little late. So, again, cash flow projections and watching those things, absolutely critical, staying on top. And, of course, there's got to be some sort of mechanism to tie back to the superintendent and the board about financial activity in language they understand. It is a lifelong process. Superintendents and Board of Educations typically aren't trained in the things that you and I are trained at, and they think differently than we do. So we have to make our analysis plain to them so that they understand what we know about our fiscal condition. Letting them know, staying on top is critical for that. All right, we're almost finished. There's a couple resources out there for you. The State Education Department, obviously, there's an awful lot of information. There's a website there for you to check out. They have just a plethora of information. In the old days, we used to have a whole field, or a State Education Department used to have staff to help us with everything from insurance to bonding to payroll and so on and so forth. Unfortunately, a lot of those guys have gone since retired, so they're doing SED does a lot of work shorthanded these days. But take it upon yourself to dig out the information you need. The State Education Department provides that information, as well as the Office of the State Controller. Excellent website. I was there today looking at a whole bunch of stuff. Snoop around there. There's an awful lot of publications. All of our manuals now, I used to call them, click on publications there, Accounting and Reporting Manual for School Districts. In the old days, we called that the Blue Book. And literally, I have mine still on the shelf when I started almost 30 years ago. And it's a blue book. It's stuffed with all kinds of accounting releases and guidelines and guides that we use. But nowadays, you can get that right off the website from the State Controller's Office. That, by the way, that publication, the reporting manual, shows almost every transaction you can imagine is reported, is outlined in that manual, and it's essential for the operation of the school district. Let's see, I wanted to say one other thing about that. Let me give you a little plug for Accounting 1 and 2. Accounting 1 and 2 takes you through the entire year of transactions for all those funds, and some special accounting treatment for retirement systems, fund balance, and a whole lot of specific information. Those accounting courses take you right through the whole year's worth of transactions. It does a nice job, too. So, again, if you want it in hard copy, that Accounting and Reporting Manual is critical. It gives you an awful lot of help. If you want to take those courses, Accounting 1 and 2 does a great job of walking you through the whole school year from start to finish. There's that little hint right there. New York State ASBO offers classes in School District Accounting 1, 2, and 3. Accounting 3 is a real bear, I have to tell you. I taught the course a few years ago, and that was a real challenge. That teaches the business official how to prepare financial statements. So it takes Accounting 1 and 2 and then puts it on steroids. That's a tough course. But at the end of the day, you'll be able to build your own financial statements from the ST3 and other resources that you have available. Accounting 1 and 2 and 3 are 1.5 days each. And, of course, ASBO's website and their professional development calendar is replete with all kinds of opportunities. There's fall and summer workshops. There's a spring workshop that I did not put on here, held every May and June in preparation for the audit. And it's an excellent seminar, usually a one-dayer, held at various places across the state. I recommend that you enroll in that. It gives you a good opportunity to get ready for the audit during the summer and other summer work. Obviously, you're participating in a webinar, so you know what that's like. And also ask the business official if there's local chapter seminars and workshops that can provide some help. Usually those trainings are really good. You get a chance to sit down and chat with other colleagues about maybe common issues and problems that you might be going through, or it's a great resource to call your neighbor and find out how they're treating this entry or that entry. So I'd like to thank you for taking the time today. You have my phone number there and my email. If you have any specific questions or such things, please feel free to call. And I mean that sincerely. There's an awful lot of mileage here. We've covered just a little snippet of things, but some of the greatest resources you have are your neighbors, and we've developed a great network of help in these areas, so we stand ready. So, Matt, I don't know what's next. You tell me.
Well, thank you, Joe. We appreciate it very much. If anyone has any questions for Joe, this is our Q&A time now. If you'd like to ask a question over the phone, please hit 7#. That'll alert me, and then I'll put you through. Or you can, of course, use the chat window located to the left of the main screen. Again, if you want to talk over the phone with Joe, please hit 7# or type in the chat window. We'll give you a couple minutes here to go ahead and do that. Okay. If no one has any questions, please feel free to take down Joe's information. It's right there on the main screen, or you can email me and I can pass it on. If you have any questions about accounting 1, 2, or 3, please feel free to call the office or email me. My email address is mdarius@nysasbo.org. And thank you very much for coming. We appreciate it. Joe, again, thank you very much. That was excellent.
Thank you. You're very welcome, Matt, and say hi to the folks in Albany for me.
Absolutely. Well, I'll speak with you soon. Thank you, everyone. Have a great day and a great week.
Thank you.
The moderator has ended the conference. Goodbye. Thank you for calling.